The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to Acuma's On Point Podcast, a series focused on sharing the stories of people who are making a positive impact in the credit union mortgage industry. I'm your host, Peter Benjamin. Today's episode is being brought to you by First Close. Today's members expect a simple way to tap into their home equity loan. First Close makes it easy with their end-to-end platform, First Close Equity. It includes a borrower-facing point-of-sale solution that gives members instant online feedback on their home valuation, available equity, loan options, and it delivers credit decisions in minutes. Automated workflows, including one-click ordering of settlement services needed to originate the transaction, takes friction, cost, and risk out of the process. Joining me today from First Close, my co-host, Craig Austin, Executive Vice President. Craig, how are you doing today?
I'm doing well, Peter. How about you?
I am awesome, man. Hey, Craig, I appreciate you being here. Really appreciate the sponsor, your support of Acuma. Yeah. I've really enjoyed getting a chance to meet you, but do me a favor, let's pause and give us a quick update on everything happening over at First Close.
Yeah, it's exciting things happening. Obviously, we have an extensive list of credit unions and partners that leverage First Close today. We have done some amazing things both on the front end and back end, and you spoke high level about everything First Close does end to end, right? But if you break those into four dynamic parts, it's front end point of sale application, right? And really giving that member the experience of coming through and getting data around, how much equity they have in their home, what their home is worth, right? Not asking that applicant, that member, but telling them based off of hitting third-party data sources, bringing them through the second part, which is the borrower portal, dynamically collaborating with them. I think in the past, there's been this idea that it's hard to have that in-person member experience and having some kind of digital application in place, right? You didn't want to ruin that, right? So we've built a way to be able to collaborate with that member, that applicant, while you're still obviously have that experience that obviously makes our customers so important in their community. And then you have the order automation that you mentioned, Peter, right? The ability to either order a la carte items, and we're talking about valuation, insurance products, verification services, et cetera, automatically based off of loan criteria or a la carte, like I mentioned. And then that last piece being the closing experience, right? Closing in branch,
very important,
hybrid, or obviously full RON when it's available. So trying to, bring our industry into 2023 and push certain automated products, but balancing that with collaboration with the members. That's been big.
It's awesome, Craig. I know you guys focus on home equity, and I think we have a great conversation that I know you'll be able to contribute today. Our special guest, picked a great topic that he wanted to discuss. Knowing that you primarily focus on home equity, I really am looking forward to how you can contribute to this, because home equity is hot right now. I mean, yeah. It's people are tapping into it. People are really trying to figure out, okay, well, how can I leverage my current home equity for that next thing in life, whether it's a home improvement or that next home that they're looking for. Really looking forward to this as well. And not to mention with today's topic, we often forget that home equity can help them with that American dream, purchase that home, that next step. So let's take a pause before we bring in our special guests and before we really dive into the meat of today's conversation. Krista, how are you doing? Do me a favor, give us a quick update on everything happening over at Acuma.
Absolutely. Hello, Peter.
Howdy.
We are really focused in on annual. Annual is coming up starting October 1st. Still time to register, everybody. So
a lot of time to register.
A lot of time to register. Please visit our website and get yourself signed up to come. We have amazing content.
Yep.
Over 50 speakers, Peter. Thank you very much.
I can add more if you want me to. It's not too late.
No, we're good. 50 plus speakers is awesome for our conference. Our exhibit hall is full. all of our sponsors, exhibitors are raring to go. Super excited to meet and greet everybody this year. And also our YPN network. We're going to have a free reception for the YPN community, as well as a roundtable on Tuesday, October 3rd. So we're really excited to provide that for our YPN community. And just a housekeeping note, the room block is released on September 11th. So if you all are listening and you need to make a hotel room for annual, please do that in the next couple of weeks so that you can have a hotel room.
So really just right around a month away, that room block goes away. Exactly. So
looking forward to annual. And then, also turning our sites. We have virtual education offerings all year long.
Yep, so we're not stopping that.
We don't stop that. So that is podcasts. That is our YPN meeting every quarter. Mm-hmm. We have webinars every month, several podcasts released a month. So just keep a listen for all of that, everybody. Again, website, LinkedIn, Acuma page is a great resource. So, and these are free. This is free for you all to listen to and be part of the Acuma community. So definitely dial in with some of that stuff. And then stay tuned also. 2024 workshops are in the works, and excited about those. Locations, dates, all of that good stuff also coming your way. So
yeah, appreciate it.
Yeah, absolutely.
Yeah, I will say this. I'm happy you brought up, 2024 next year. Even though here we are, I guess about a month and a half out from our annual conference. I think it just goes to show, how focused we are on continuing the momentum from 2022 and 2023. And we're already looking ahead to what can we do and how can we do better next year.
Absolutely.
We have some great things already in the works for 2024. Really looking forward to it. First and foremost, I keep saying it, I'm already looking forward to the annual conference. I couldn't be more psyched up and for this one, but 2024 is right around the corner and we are already in the planning out everything. So anyways, Krista, thank you very much for that update. Really appreciate you being here. Stick around, of course. Please jump in whenever you possibly can, but also more importantly, stick around for my favorite segment.
I know it. I'll be here. Thank you.
Sounds good. All right. Well, today's guest is Michael Ferrero, president of Mortgage Market CUSO. Michael, how are you doing today?
Peter Benjamin, I am great. Thanks for having me. How are you?
I love it, and I love the energy. Thank you very much. And by the way, I am living the dream. Thank you for asking.
That's a good thing.
Don't wake me. Just don't wake me. So Michael, you picked a great topic.
Yeah.
And I'm actually really looking forward to this because, a lot of times we have guests on here that we focus on the leadership aspect of what we do and the brand awareness of what we do and several other things. Right. But, here we are, we're in August, well over halfway through the year.
Right.
And, the purchase market is still very much front and center of us. Right. I think that's, and this is an interesting point, is I was having this conversation with someone the other day where, we kind of looked at the historical nature of the seasonality of the mortgage business, right?
Yes.
And I keep asking this question, when the purchase market, used to be just the summer months, really, we'll say late spring, summer months, that was the purchase market.
Yep.
I'm really seeing that seasonality change quite a bit. And then it's almost like that. They're almost to the point where there is no seasonality of that purchase market. It's just a purchase market in general, right?
Yeah.
And so, thinking about how it's just every day, doesn't matter if it's December, doesn't matter if it's August, doesn't matter if it's February, March, it's purchase market, right?
Yeah.
But here we are, right? In August, really still trying to figure out how do credit unions really break into the purchase market? And part of it is a conversation on market share. Like, how do we increase that market share? Part of this conversation is based off of, what marketing techniques and strategies do we need to do? Like, are there different type of drip campaigns that we have to really bring on to do this? But anyways, I'll take that step back. So let's talk about this. So, Michael, in your opinion, first of all, what's the first step that a credit union needs to take to really start moving and pivoting to that purchase market?
So, topic I'm passionate about, Peter. So I appreciate us having a really, great conversation about this. So I'm at a credit union, right? I'm sitting there and I'm saying, we understand the market. The refi business is gone right at the moment.
Yep.
Peter Benjamin's out looking for a home.
Every day.
Put yourself in the shoes of Peter. Okay. If I'm at a credit union, think of your member. What are they going to do? Are they going to your website? Mm-hmm. Are they Googling mortgage? Mm-hmm. Right. So if they're Googling mortgage, will you come up? Will you be top of mind? Because and the reality is your member is shopping in a purchase environment. Okay. So you have to keep that in mind.
100%.
So if they go to your website, are you making it easy for your member to apply? Is it a long, antiquated experience? Is it a lead, right? Well, a la like a Rocket or some of the companies that have top market share, they make it quick and easy and seamless for the consumer.
Oh, Michael, right? we don't say that R word.
They make it easy. And does your credit union make it easy? Or are you driving your member to a 10-minute application, right, per se, where they might stop in the middle of it, be confused, and go somewhere else with some of the fintechs in the industry, right, might make it quick. So where I'm going with this is look at your process for your member and how they're applying.
Okay. So you said several things, and I'm going to paraphrase, right?
Yeah.
So you broke down technology, right? And you broke down a big part of that's going to be the process, how they go through the steps in order to buy a home, right? But the one thing that jumped out is, are they even aware that this is something that you do, right? First and foremost, outside of technology, outside of your process to make it as easy as it possibly can be for them, I guess bring it to their attention and letting them know, hey, this is something that we do is really step number one, right? Or did I miss that in everything?
No, you're right. I think where when I collaborate with credit unions and talk to them, and in my prior life, I was a vice president of lending at a almost $3 billion credit union. Are we going to rely on the member coming to our website when they're interested in a mortgage? Or are we going to get ahead of that? Meaning, to your point, Peter, are we going to email them? Are we going to let them know that we offer mortgages? Are we going to promote it via Google ads, right? And via different marketing campaigns? Because I feel very strongly is as a credit union, if we're just sitting back and waiting for the member to come to our website, to your point, how will they know we offer mortgages? Front and center, marketing and awareness, because we understand that member will be going out and Googling different mortgages, and they may not even be aware that you offer them.
Yeah. Part of that is also, it's not just the borrower, right? It's not just our borrowing member.
Yeah.
It is the realtors in our community as well. Mm-hmm. It's part of it. I have this little presentation that I give to a lot of credit unions, and it's called Debunking the Myth, right?
Yeah.
And part of it is that myth that credit unions only do two things: credit cards and auto loans.
Right.
It's trust me, there's a lot of non-bank lenders out there that are going to tell their borrowers, well, that's all credit unions do. They're only going to do an auto loan. If you want an auto loan, go to a credit union. Don't go for a mortgage, right?
Correct.
And they in turn, they tell the realtors in that community. And in turn, that realtor, for the most part, who's driving the bus on where that borrower goes to for that mortgage, is saying the same exact thing. So it's almost like a PR campaign that every credit union has to do to get ahead of that, to almost say, hey, we're doing mortgage. We're doing it probably better than, actually not probably better. We're doing it better than that non-bank mortgage lender. But at the same time, everything that you hear that we won't get it done is completely a lie. Like, we'll get it done. We'll hit that mark. Your borrower will be happy. And in fact, your borrower will thank you for sending that business.
Peter, when the borrower is pre-qualified on a purchase, right? Let's segue into what you're saying. Your loan officer, what are they doing after that? They should be picking up the phone and calling the realtor and introducing themselves and engaging with them to form a personal relationship. Because as you just said, we know the realtor will try most often than not to steer that consumer possibly into other, avenues, right? Period. That's just the reality of the mortgage business. And we have to all just kind of understand that. I think too many times our credit unions just trust that the realtor's just going to send them back, even though they're pre-qualified to the credit union. That's just not the case. So forming that personal relationship immediately and building trust with the realtor is very, very critical. And keeping in touch with them and keeping, close to them throughout the entire home buying journey is absolutely imperative, because if you just do a welcome call and then you out of sight, out of mind, right, and move on to the next person, and then that consumer who's pre-qualified, right, is shopping for their new home and they don't hear from you because you're moved on to the next thing, the realtor might try to steer them to something else.
Right. So
I couldn't agree with you more.
Now, so I'm going to take it even one step further. And this is something, back when I led a mortgage division for a credit union, this is something I did my best to kind of just tell my loan officers to do. It was, your members, they can see the Domino Pizza tracker because they can log in and check the status of what's happening with their loan.
Sure.
But the realtor can't. So as that loan moves through the process, you need to have that conversation along the way with that realtor, right? You just have to do it. Pick up the phone. Some realtors, are welcome text messages. Shoot them a text message, send them an email. It doesn't matter. No matter what, provide that realtor with an update. But one step further is really, it's not just that buyer's agent. It's also that seller's agent.
Yeah.
And it's that initial phone call that a loan officer really has to make to reassure that selling agent, hey, you're in good hands. And that's all you really need to do. Like, you don't need to provide the seller's agent with a whole bunch of updates. That's really reserved for the buyer's agent. But just letting that seller's agent know just one time, this transaction's in good hands. We'll get it to the finish line. You can trust ABC Credit Union.
Right.
That's it. Right.
One of the things that Mortgage Markets QSO has done for our partner credit unions, and I think it's been critical in this purchase market, is we have set up extensive drip campaigns throughout the entire experience when a loan is in processing to engage with a realtor. And what do I mean with that? It's kind of what you just said. So initially, right, a loan comes in, our LOs will put information into our LOS, right? So we have the realtor information, buyer and seller information. Then they call, right? And they do a welcome call and get them excited to be working with us because they want to know who you are. To your point, Peter, they may not know a credit union, right? They may not understand what you do or who you are. Get them excited. What we do then is every time the loan moves and a milestone changes, we have someone else call and introduce themselves to the realtor and let them know we're now in processing. We're now in underwriting. We're now clear to close, right? We have text messages and emails to keep it as sticky and engaged as possible, because your point's well taken. It's one thing to do it initially, but it's throughout that entire process and experience. You want to keep them kind of lockstep and key with you, right? Too many times, from your past life, the realtor's calling, where's the loan? What's going on? I haven't heard from anybody, right? I have a contingency date coming up. I need an answer now. I'm going to lose the deal because you're not following up and keeping close. Then you have a bad reputation, right? And it just goes out and it goes downhill from there.
Right. Yeah. And I will say, in the times that I was able to originate, while working at a credit union, those special VIP type loans.
Yeah.
The realtors always knew what was happening. Right. And to the point where even if it wasn't a loan that I was kind of told I had to originate, the realtors would still call me, and They would still take a vested interest in making sure that they provided this business because of the one service that I provided them, that one transaction.
Right.
But it doesn't stop with that over communication, right? Because it's continued communication. It's continued. Hey, we did. But I'm not going to say we did you a solid, but we did pretty good on this first one, right? Let's try to get more like that. Let's repeat that the next time around. If you have a loan that meets these parameters, if you have a borrower, send them my way, right? And the best way to continue that conversation, at least I personally feel this way, is, I talk to some realtors, right? I still talk to realtors. I still have friends that are realtors. They don't want to go out to coffee anymore. They don't. Everyone's asking them out to coffee, right?
Yep.
What's the advantage, right? How caffeinated do you really need to be? One person really need to be. The best way to kind of continue that conversation of, hey, let's do this again, is when possible. I know it's not always easy because a lot of credit unions can lend nationally, but when possible, go to that settlement. Just listen. I don't want to say that the pandemic is over because people still get COVID, But things have opened back up.
Yep.
Your loan officers are once again allowed to attend settlements. Go attend that settlement. Meet that realtor. Meet that settlement agent.
Love it. Yep.
Take their hand. And after that borrowing member has taken that key and they're walking out that door, hang back, have a conversation with that realtor, have a conversation with that settlement agent, and just talk about the experience and how you can continue to partner. I think that's so vital that we're not doing.
And this is such a critical point, not to kind of belabor it, but it just goes to the purchase environment. So credit unions, out there, when your loan officers are pre-qualifying someone, understand it doesn't end there.
Right.
That's the kind of the message I want to drive home, that if you're pre-qualifying 100 loans and you're getting back only 10, there could be things to improve on as far as relationships with the realtors, and also having update conversations with the consumer as they shop for their home, right? Because as we know, again, I'm going to say it, it's not just the realtor. They're talking to friends. They're talking to family. They're looking at rates. Right. Yep. There's so many different variables, Peter, as you know, out there, that you have to keep the personalized conversations going throughout their entire journey. I see too many times that credit unions will pre-qualify someone, right? It goes into a queue, and then they're waiting for Peter Benjamin to call me back when they find their home, right? They just sit back and wait. That's not in a purchase environment how you're going to get the job done or get more market share. Very candid.
I agree. It's something else. Another thing I used to tell my loan officers was like, every single Friday, if you have pre-approvals that are outstanding and that borrower is actively shopping,
you
should be calling them.
Absolutely.
And finding out, okay, well, it's Friday. I know you're going to go look at homes over the weekend. What homes are you going to go look at? And let me provide you some updated pre-approvals. That way they can go and they feel more confident knowing that, hey, if I need to submit an offer, but if I find my dream home on Saturday and I'm submitting an offer that evening or on Sunday, I have a pre-approval that I know that I can
Boy, qualify. What a great point that is. I can't tell everybody how big of a point that is. I can't tell you how many times I've received a call on a Saturday at 4:30 with a 911 that I need an updated pre-approval letter because I only have a pre-qualification letter, right? And I need a pre-approval now, right? Or I'm going to lose the house. And then you need to get the loan officers and you're frantic and you're, running around trying to help the consumer. The realtor's calling you, right? Going, oh my God, I need this. That's a great takeaway, Peter. I think that's a great suggestion for credit unions to implement. I like that a lot. Yeah.
I'd always tell my team, there's a method to my madness. I love it. Stick around. I even tell my team right here, there's a method to my madness. Krista, come on now. Come on. And anyways, all right, so let's pivot. So we talked a lot about just general techniques to kind of create that that experience that helps you break in. Part of it is the experience, right? But let's start focusing on that technology aspect, right? And again, I think technology and process go hand in hand.
Yeah,
they really do. They're complementary items. So let's focus on the technology. You said you use words like make it easy, right? So let's talk about that. Let's dive a little bit deeper in that.
Yeah. So here's another topic I feel pretty strong about. Credit unions historically, although they're beginning to pivot, okay, when the consumer's interested in a mortgage, you have to fill out the application, right? We know this. You go to the mortgage center, you fill out the app. If we're honest with ourselves, the mortgage application process is confusing. You have a lot of questions, unless you're ready to refi, right? And you're ready to go right away. But on a purchase, how many times have you seen the consumer stop in the middle of the application, right? Because they don't know. This is overwhelming. Think about a lead generator or a lead form to make it easy for them so they can submit something to you to engage with a loan officer prior to them applying. Instead of just saying, go apply, you're losing market share. I think credit unions have to look at that model because, as I mentioned earlier, we won't mention the R word. That's what the fintechs do. When you go online, they're not driving you to a full 10-minute application. It's those interactive, right, bubbles experience. And then your phone rings immediately, right, Peter? and a loan officer is calling you, talking to you with questions before you apply. That's where I feel credit unions have to look at that experience in the ever-changing kind of fintech mortgage environment. And I feel really strongly about that.
Now, you said, the funny thing is that you said 10 minutes and I kind of smirked. When you said 10 minutes, it's because
maybe 30, right?
No, but the funny thing is that there are some applications that take 10 minutes because there's enough, we'll say, additional services out there that make everything a little bit easier. Like there's vendors out there that pull in asset and income information as part of that process.
Right. Yep.
The borrower's not filling that in. Their credit's being pulled simultaneously. I mean, all this stuff is happening behind the scenes that really does make a 10-minute application. But the funny thing is, I laughed at it because it's only 10 minutes, but oftentimes that's way too long.
There you go. Yep.
For people to sit down for 10 minutes and complete that process. Whereas that 30-second, we'll say, lead form that you're referring to,
right,
is really all that it takes to capture that business.
Yep.
We forget that the loan officers can complete an application. We forget about that.
Right. And that's where I'm going. I think if you think about the fintechs out there, right, that compete in the credit union space, they do that 30-second experience, and then they have it set up to where you get a text message, you get a phone call, and the loan officer is engaging you right there. And they'll go, hey, Peter, let me do the application right on the phone for you right now. I'll make it easy for you, right? I'll answer all your questions. Not the other way, as I keep saying, you do it first and then call us if you have a question. That's where I feel credit unions need to look at that experience, especially, again, right back to the topic we're talking about, in this purchase-dominated environment. That's really where I feel we're missing the boat as an industry. I really do.
It's interesting because they don't want to spend 10 minutes completing the application on their own, but they will spend an hour on the phone with the loan officer.
Absolutely, 100%. Absolutely. It's that personalized, right, kind of conversation, and you're answering questions kind of as you go.
Right.
So again, technology, process, look at the experience up front. I think it's something all credit unions should take a really hard look at.
Okay. We're approaching time, but there's one thing you did that we didn't talk about that is really needed for, we'll say that for credit unions to break into this purchase market. It's product, right?
Yeah.
I mean, it's having the right,
great point,
product. Well, and I'm gonna say this. I keep saying this. As a credit union, as a mortgage lender, you can't be everything for everyone. You just can't. But it's okay to have the products that your members, your borrowing members need and what they want, right? I think that's the most important thing whenever we do product development is that we just create these products, our portfolio products, or we have products just because Joe Schmo down the street has this product. Well, that may not be needed for your member base. That may not be what they want. We often forget, I'm looking at Craig right now. We often forget that, hey, there's that good old thing of a piggyback home equity. If you have a piggyback home equity and you have a partner like First Close that makes the home equity process a lot easier. I mean, that's a solid plan that can help a borrower get into a home.
Yeah, we've talked about some of the disadvantages. I mean, that's one of the major advantages, right? The optionality, Michael, that you guys can provide your customers, and that's educating them on the right path to go down, right? Not just contacting an IMB and saying, "Hey, I want to," right? And them only pushing you that direction and not looking at that customer's best interest,
right?
Saying, actually, let's look at everything. This is the path you should go down based off, and then you're in the next business, because they trust you as an advisor, not just someone just trying to close their loan.
Right. And, you made a good point, Peter, because I actually did this myself. And this is where a company, like Craig, like First Close helped so much. Listen, when I bought my home, the loan officer talked about piggybacking a home equity, right, as part of it. And so when I bought my house, and then I had a line of credit too, right. Per se, a HELOC. So in case of emergency, and that's something we do at Mortgage Markets Q. So when we're talking to the consumers, we try to identify, Craig, as you said, right, we're having conversations to identify different areas that we can help them. And if a HELOC makes sense, a home equity line of credit, whatever it is, to help the consumer when they close, we then work in collaboration with our credit unions to say, hey, they're buying their house, but you know what? They might want to piggyback a line of credit, on this too. And that's something they really appreciate. too. Again, from the other way, if you just go apply for the mortgage and just wait, you don't really have that kind of experience.
The funny thing is, like, a lot of credit unions are having that liquidity issue, right?
Oh yeah,
and they're scared to put a first mortgage on their portfolios. Well, you know what? One of my favorite products I used to recommend to my loan officers all the time: do a 75% fixed rate mortgage and a 20% home equity on top of that.
Yeah,
it's still sellable. I'm getting that loan off my books. That first mortgage, and I have a home equity that is a variable rate that I don't really have that liquidity issue with, right? Because it's viewed completely different. So we have to get creative with these products, and we have to go back almost to the point of going back to fundamentals and basics of how do we originate loans or break into this market. FHA loans are fantastic. VA loans are fantastic, and sometimes you have to have an aggregator to sell those to. But I'll use the credit union I worked for, and we didn't have a lot of FHA loans. We didn't originate a lot of them. We didn't originate VA loans a lot. You want to know why? PenFed and Navy Fed, they were right down the street from us.
Yep.
Someone's not going to come to me for a VA loan when literally, a mile away is 4 different Navy Federal offices. It's just not going to happen. But let me jump in
on this. Please. I couldn't agree with you more on this, because I was out talking to my clients, around February, right? Knowing where we were going to go. And I was on my kind of passionate speech going, you need to create a portfolio product now in this market, because guess what? The small community bank down the street or someone else, they're doing that at a lower rate because they can put it on their portfolio. And if you just have secondary market products, right? 30-year fixed, this is what it is. You're going to lose business. When our partners, I have one specific partner that created a suite of ARM products, right? In this market, their business quadrupled, right? Their portfolio products, it's giving their members a reason to get a mortgage through them. And you hit the nail on the head. Give the consumer, the member, a reason to do a mortgage with you, because they're just going to shop elsewhere. So looking at your portfolio products, and I understand too, you make a good point, Peter. Liquidity is an issue. So there is a balance there right now in the environment we're in. I understand that, but trying to figure out that balance, creating a product, if you can put it on the books or balancing liquidity, I think it's critical in this environment. And I don't think this environment's going away anytime soon. So continuing to think about it as you go into strategic planning, right, come October for next year too, to be honest.
Hands down. Yeah. So listen, I love these strategy talks, especially about something, things I feel like we're both very passionate about.
You can tell I'll keep talking. You better cut me off. I'm not going to stop. So
we once did an hour-long podcast, and I'm pretty sure Justin was like giving me like the death look, like this is going to be impossible to edit. So we're not going to do that to him right now. We're going to we do have to pivot. But before we pivot, one final question. This is more so directed towards you. And again, I can tell you're very passionate about this.
I am.
There's a fire behind this topic, but at the same time, there's a passion and love for the credit union industry as a whole.
There is.
So the question is, what really kind of sort of started it all for this podcast. Everyone gets out of bed. We can all get out of bed every single morning. There's always something that keeps us coming back to this industry, that keeps us motivated to want to be better. What is that for you? What is that one thing that keeps you pushing forward? Again, gets you out of bed. It's your motivation. What is it?
Yeah. I mean, it's funny. The first thing that comes to my head has nothing to do with mortgages. It's my kids.
That's fine. That's fine.
Yeah. I'm just going to be very candid with you. The first thing I think of are my kids. I have 4 kids, and which is, and they're young, right? I have a 14-year-old, I have an 8-year-old, and I have 2 twins who are 2.5. So
I didn't know you're a twin dad. I
am a twin dad. Frankie and Clementine, they're beautiful 2 little girls. So
I have Harper and Riley, 2 little girls.
Nothing better. So that honestly,
I don't know about that.
Yeah, well, yeah, I agree. But I'll be honest with you. Besides my children and understanding, as passionate as I am to be the best dad I can be, I love figuring out the mind of the consumer, and I love putting myself in the shoes of the consumer in this rapidly ever-changing world and thinking of better ways in the credit union space we can engage with them. I love it. I really do. It's because it's exciting to me, Peter, right? Because it's so rapidly changing. And how can we as an industry get better at that? It just drives me. And again, you touched on all of it. marketing, process, experience, engagement. It's never ending, right? We can do this. We could talk about this and do it all the time. It's so fast moving in our industry. I just can't get enough of that. I love being strategic, thinking about different ways to help credit union members. I really do.
That's great. That's great. That's great. All right. Well, I hate that I didn't know that you're a twin dad.
Oh yeah.
Well, but hey, and I do now. We have some. We have something to talk.
Funny story, quick, and then move. So we were at the office the other day with the twins, right? And there was a janitor there cleaning up, right? And I guess he was in the closet cleaning up, whatever. And then he opened the door and he jumped out and he goes, "Supplies." I was taken aback a little bit. You know what I mean?
Yes. Yes. Oh, that was awesome.
There we go.
No.
Bad joke humor.
Is that your bad dad joke? Come on.
Hey, we are not calling them bad dad jokes anymore. We're just calling them dad
jokes.
Yep,
okay.
Yep.
Yeah.
That was perfect. That was perfect. Thank you. I said I was going to let you do one. You snuck it in there, but
there we go.
I appreciate it. But so I'm going to use that as the perfect segue to the second segment of our podcast. Again, this is where we do dad jokes. This is where we do fun facts. We do trivia. We do Jeopardy. Today, we're going to focus on some trivia. So, here we are, middle of August, still very much in summer. I'm going to consider where, this still kind of sort of in the middle of vacation season, or at least vacation season's winding down at this point. And so we're just going to do a little trivia on just vacations and travel. Nothing hard, nothing hard. Now, I have a handful of questions, and we're not going to go in order. And actually, there may be one or two questions I might ask the individual. So I may ask Michael directly, or I may ask Krista directly. But for the most part, this is all going to be directed towards the group. So Craig, Krista, and Mike. Sound good?
I'm ready.
All right. So question number one, and I'll direct this to the group, and we can all take turns answering, or you guys can take turns answering it. Question number one is, what is the most visited tourist destination in the world?
World, not United States.
In the world.
Okay.
In the world. Most visited tourist destination in the world. Krista.
I'm going to go with Grand Canyon. Even though I know it's the world, I'm saying Grand Canyon.
I think that's a good guess. I love the Grand Canyon. It's beautiful.
Yes.
Okay, good. Although, have you seen the lines? Have you seen the lines at like Yosemite? I mean, give me a break. That's ridiculous. Craig, go.
Michael, I don't think it's going to be in the U.S. I think I
agree.
I think it's going to be somewhere around India and China, highly populated areas where people are going, right? So I'm thinking, it's going to be, I don't know, this is going to be like Thailand or something like that. Something.
So I'm in the same kind of realm, Craig. I was thinking more like the Great Wall of China, maybe something like that.
Yeah.
I will go with that just because of the population, and the amount of people that might kind of gravitate to that. I was going to think of Eiffel Tower, but I'll go with.
Are we talking locations? Are we talking like monuments, or what? What are we? What's the kind of the more?
Again, the question that I found, it's based off just general tourist destination.
Yeah.
Eiffel Tower is a good one too.
Yeah,
Eiffel Tower is a good
actually one. Might be the one.
Yep.
All right, so
that's it. I'm changing my answer.
Okay, I'm going to say that you're all wrong.
Oh.
So
wow.
So the most visited tourist destination in the world. Now, I will say this. I personally do not view this as a destination, but perhaps it actually is, depending on how you view it. It's actually Times Square.
Oh.
Wow.
Times Square is the number one tourist destination in the world, which is, I in many ways you can see it just because every single time you see pictures of Times Square. But I wouldn't necessarily consider it a tourist destination, but perhaps it is. But maybe that's just having gone there and saying, I don't get it. But then just,
I wouldn't have thought of that. I could have thought of the Statue of Liberty, maybe, right? In New York, not so much Times Square. Huh. Interesting.
Okay. So, all right. So next one, we'll stick with the whole destination type theme. What is the smallest independent nation in the world? Again, what is the smallest independent nation in the world?
I'm not guessing first in this one, guys. This is all you.
I don't know. I'm just, Krista, you're going to have to take one for the team here.
I got nothing, you guys. I'm trying to think about little countries over in Europe, but they're not so little. The ones I'm thinking of.
I'll give you a hint. It's in Europe.
Thank you.
You're welcome.
Wow.
I'll give you an even bigger hint. I guess it's considered Eastern Europe. No, sorry, Western Europe. Western Europe. It would be considered Western Europe. I'm looking at a map now.
Like one of the stands, like Uzbekistan or something like that. I am
Pakistan.
really
those
sorry of my geography, but
those aren't Europe.
Okay, then
Western Europe,
I don't know.
about like Portugal or like, but that's not that small. I mean, it's
no.
place. Yeah.
Croatia.
That's pretty close. Actually, Croatia is actually a very good guess. And by the way, that is on my bucket list to go visit.
I know. I've heard how beautiful it is, and the water is supposed to be amazing over there.
Hands down. Yes. That's gonna happen. That has to happen soon.
Yeah.
All right. So I'll give the answer. It's Vatican City.
Really? Oh.
You wouldn't think
That's hard.
You wouldn't think that it's an independent nation, but it is. All right. So we're gonna switch to travel, and I don't want to ask this question, but I'm going to because I travel a lot.
Yeah.
What is the dirtiest part of the plane?
Wow.
I know we don't want the answer. We don't want the answer, but I'm still going to ask the question.
So obviously not the bathroom. That'd be too obvious.
Yeah.
Right. So it's going to be
Totally.
Maybe not.
I'm going to go with the seatbelt clipper thing.
Oh, good guess.
That is a good guess. A lot of people touch that.
I'm going to go with the controller for the TV. If it has TVs, then it's the changing the channel.
That is also a good guess. That's also a good guess.
I'll kind of stay on that lines. I'll say it's the tray table.
Michael, you are correct.
Oh,
it is the tray table. So I am now going to bring the Clorox wipes with me everywhere I go.
Wow.
And I'm going to wipe down that tray table on every airplane. I'm shocked. Chris, I'm shocked. Do you do that, Krista?
Oh, absolutely. I'm a mom of two boys and I'm a germaphobe anyway. So pre-COVID, I still wiped down everywhere I touched on my part of the airplane. So I absolutely do.
Because you eat on it. I rest my iPad on it.
I know.
Drinks. And it's like, and your hands are rested on it. It's like, now I'm bringing these Clorox wipes everywhere I go.
That's a great point.
Yes.
Would have never thought of that.
Now I need to put hand sanitizer on my hand. I all of a sudden, like literally, I just had like the sudden urge to put hand sanitizer on my hand. That's not good. That's like, ew. What else am I touching? All right. So let's do one more question.
Okay.
All right, here's one. I'd be interested to know if Justin knew this at the end. It has something to do with ships. What is the average speed of a cruise ship? And in terms of knots?
I'm going to go with 100.
100 knots.
I don't know why.
That's like lightning fast.
Well, it's a cruise ship. They're huge. Aren't they supposed to kind of go? You can't tell they're going fast.
Justin just pinged me.
Did he say Krista's crazy?
All right, so Justin's chiming in. He's saying 5.
Oh, 5. Okay. See, I don't know.
I'm gonna go 35.
All right. So the reason why I'm saying I'd be interested if Justin knew this because he was in the Navy. He was in the Navy.
You're right. Yeah.
Okay, so he was in the Navy. All right. So Craig, what are you saying?
I'm saying 35.
35. Good guess. That's a very good guess. Michael,
I'm going to say 20.
Michael wins again.
Wow.
It was 20 knots.
On the money, too.
Let me tell you, that was just a guess. That's I went in between 5 and 35. That was good.
That's a good job. Good job.
Your coffee mug present will be in the mail, Mike.
There we go.
So just wanted to so you know, 20 knots equals 23 miles per hour.
Wow.
So, I mean, that's like driving in a neighborhood.
Yeah.
That's residential speed right there. That is the average speed of a cruise ship.
I would have never known that.
Interesting. It's very interesting.
The slower they go, the more money they'll spend on the cruise ship. It's actually a really good strategy.
That's true.
That is a very good point, Craig.
Peter, we should have at the annual conference a trivia like night or something where we do something like this. This is great.
I love this. This is good.
Yeah.
Or we'll do dad joke stand up.
There we go. I'm in.
Dad joke stand up. Chris is like
growing up.
Do you see Chris's face? She's like, not over my dead body.
My mother, when I grew up, a little fun fact, she was a nun before, obviously, she had me, but she was a nun. She met my dad. And growing up, she used to sleepwalk all the time. And, we used to call her the Roman Catholic.
All right, Mike. Craig, do you have any that can beat that?
The funny thing is,
I know. You know what? My son has a dad joke book too, because he loves doing that when he go to the barber. He just spits dad jokes out all day. But that was he's going to learn that one this morning. That was great.
So The funny thing is, Michael, I knew the punchline for that joke, and I still laughed at it. That was good. All right, we got to wrap things up.
All right, sounds good.
Michael, thank you very much for being on our podcast. We really enjoyed the conversation.
Thanks, Peter.
This was awesome. Again, I can tell you're very passionate, not just about the idea of breaking into the purchase market, but also the credit union movement. So thank you very much for being here.
No, it's my pleasure. I appreciate you guys having me, and I'm looking forward to seeing everyone at the annual very much.
Awesome.
So thanks.
Awesome, Michael. And Craig, thank you very much for being here. And again, to First Close for sponsoring today's podcast. We couldn't do this without you. Again, I keep saying over and over again, without your support, we couldn't bring such great content to our members. So Craig, thank you for being here, but also thank you to First Close.
Thank you. Appreciate it.
Of course.
Thank you, Craig.
And really to everyone else, thank you very much for taking time out of your busy schedules to listen to our podcast. We truly appreciate everything that you do for the mortgage industry and just really being part of Acuma. I guess, to kind of wrap things up, we'll see you next time. Take care.
Thanks for listening. We'll see you next time at the Acuma On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.